From AAA this is Chris taking a look at the euro dollar. Pretty wild day. Nice recovery late in the day, though. Let me drill down to the 1 hour chart. You can see we have bounced quite significantly. Not enough to wipe out the day. But if we can wipe out most of the selling, I think that's a sign that we stay in this range. 108.50 to 110. I would even go so far as to say that the support level underneath is probably like a 50-point range, and you do get that from time to time, but let me change this. For some reason I put 50. You do get that from time to time, but eventually it all has to be sorted out. So as you can see, there's like this buffer here that did act as support. So as long as we stay above 108, I think the euro still has a chance to spike. Breaking above 108.50 would be your first victory. We're only about 15 pips from it as I record this. Really where I think it gets interesting is about 108.75. That opens up the door for recovery to 110. On the other hand, if we break down below 1.08, that could send the euro much lower, probably down to the bottom of this candlestick at 107. That would be a pro-US dollar move, probably across the board. It would more likely than not just, it probably won't be just here. So keep that in mind. So, if that does in fact happen, take a look at the pound, the Australian dollar, etc. You can see that the 61.8% fib is just underneath here as well. So you could make an argument for that mattering. But right now, this is all about the 10-year yield in America. Expectations for the Federal Reserve to possibly cut rates as soon as March has put a lot of pressure on the dollar, but you can see something snapped on Monday. So time to be very cautious. But, somewhere around the 108.75 level, I think euro bulls will come in and start to take over again.